This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Daniel O'Brien kicks off the show with a grain market update where he comments on futures, trends, and market direction. Continuing the show is Cole Ellis, K-State Beef Stocker Unit Research Assistant and graduate student, as he talks about liver abscesses for beef on dairy cattle and the research he has done. Chip Redmond, K-State meteorologist, wraps up today's show discussing cooler temperatures and expected rainfall for Kansas. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you, Shelby.
Daniel, what are we seeing for the futures?
Well, grain futures, as yesterday, at least we're starting out, overnights, et cetera, uncertain. But in general, we find ourselves D's corn hanging around 420, 425, something like that. And then some carry in the market from 423, say, for D's corn yesterday, 437, then to March, 445, to July, 451, and then you start to decline into the September contract a little bit. So there is some, I guess, in looking at where the futures are at and some of the carry, you've got for farmers that are increasingly likely in a low price time to probably store grain this year, then they're wondering to what degree does this carry in the futures contract in the D's corn futures contract complex, does that cover storage or not? And of course, right now you're looking at about 45 to 50% cost of full coverage for on-farm storage. Again, 2.5 cents per bushel per month, 5% interest on that. If you knock the interest out, it gets a lot better. But do you really want to look at this without acknowledging that, hey, there's some, you could sell cash and at least delay some interest on other borrowed notes. So you got that. For soybeans, we're still over $10 as far as November futures go, somewhere that we're kind of hanging out in the 1035, 1045 area. We would count 1050 as a major victory, and you've got political issues involved there. Again, still uncertainty about U.S. and China and how that'll all work out. In terms of cost of carry for soybeans, actually, you've got a little better situation for soybeans than for corn, really, in terms of coverage of cost of carry. You're looking at about from November to January, about 70% of the cost of carry covered. That's for on-farm storage for soybeans with a little, again, about 5% interest charge. But it starts to decline some, about 65% coverage then from November out to March. Then to May, you've got about 60%. So it's interesting that there's a slightly better situation for storage of soybeans than there is for corn. However, I think farmers are probably more inclined to store corn than they are for soybeans, at least in Kansas situations. And right now, when you look at hard red winter wheat, trading $5 or under, looking for something to really change that mode. And when you look at the carry in that, you're asking the question, well, if you haven't sold by now, what are you holding? How long are you looking to hold? Maybe they're looking to hold into spring. But from the D's contract to the March contract, you've got about 17, 18 cents of actual price differential, covering about 61% of the cost of carry. So I think when you stand back and look at all these commodities and ask the question, well, are the futures rewarding me to carry anything now or not? Well, most of the time there probably would not be, because they're looking out there, and traders are looking at price differentials at any one point in time. They're more inclined to be more upfront in their focus. If they did see opportunities for carry that were showing up in the long run, they would probably change their price bids, probably raise if they saw opportunities out front for carry, they probably raise their current bids up higher because they see opportunities. So it's a fluid deal. And if someone is storing, which I think, that's right where we're at right now, they look at current basis levels for corn, for sorghum, et cetera, recognizing that they're very weak right now in the midst of harvest, that they're probably counting on post-harvest improvement in basis bids as much as they are for futures going forward. that's from the farmer point of view. From the grain handler elevator point of view, who especially say for wheat and for corn, make a living from judicious choices on storage hedges, all of that. They're looking at basis changes probably out into the spring, transportation, et cetera. So that's where we find ourselves at right now, Shelby, really weighing what the futures are telling us, and they're not showing any big surprises at the moment. We're in the midst of harvest, still waiting for these international issues to work out, and are really, in a lot of cases, putting farmers and landowners, crop share landowners, in a situation of making a choice of do they sell now or store for later. And many of them, especially perhaps if they're near a feedlot or they see some ethanol plant situation that's close to them, they may be in a better position to store and probably anticipate better basis bids, if not better futures down the way. And last thing I'd say on this whole store now versus sell issue is we're not really pricing any spring or late winter volatility into these markets. We're pretty flat really going forward. Just we basically show enough carry in these markets to reward some storage, but not outlandishly large notes or amounts there. So I guess I would trying to be judicious in trying to in thinking about how to analyze the market to give a perspective on things. I think if we store right now, we're probably anticipating something a different scenario than the markets are representing right now. They're just looking out to the future, what they have, and pricing it at cost pretty much, and really not accounting for late winter, early spring planting time uncertainty or anything at all, really, for any crop risk out into next year. So it's I wouldn't say it's speculation, but it's a very uncertain position, not settled. And I guess the best way to address it is it puts us in the position of accepting risk, both upside and downside, out into 2026 to see a reward to storage. And oftentimes we are rewarded, but at this moment, right now, in the midst of harvest, the futures, cash markets probably aren't going to show it, would be my thought.
And Daniel, while we're thinking about our grain markets, are we likely going to have another skipped USDA report?
Days go on, that's increasingly likely. We're USDA NASS field enumerators would need to go out into the fields around November 1st, a few days ahead, a few days afterwards, much less any preparation for that. Any mail surveys to farmers would have to occur about that same time. So it seems to me like for the NASS crop production report that we're in the window. If we don't see something by the middle part of next week, then I'm not sure that NASS can pull enough resources together, can contact people quickly enough to actually have a crop report. And if they don't do that, that doesn't mean that we couldn't still have a WASDE report, say that if come November 1st, the government shutdown is over with. But on that WASDE report, you could find out about usage issues on the demand side, but the supply side would be just kind of a finger in the wind type of a deal in terms of trying to figure out what we can deduce for crop yields. So if we don't have the crop production report, then the value of the WASDE report that would follow that's projected for November the 10th is dramatically reduced. I wonder if we're putting ourselves in a position where we have a December 9th WASDE report and the USDA actually goes out and does and measures around December 1st what's happening out in the fields, but they usually don't report it until January. So I would wonder if we skip both the October and the November crop production and WASDE reports, if we do something different just to get information out there for people and perhaps make the December 1st report operative in terms of including NASS data in it. We shall see.
So is the grain market right now taking direction from what the trends of the past have been, or maybe other reports from other organizations?
I think independently, we're looking at all manner of reports from independent crop analyst groups that are giving their crop size projections. And I think it's fair to say there's just a lot of uncertainty. But what we do have in being as objective as possible, we have more harvest data now. We're not just thinking that, gosh, it looks pretty good. Now we're actually out in the fields and seeing where things go. My own thoughts are, I think we've heard enough information about less than stellar, pretty good, but not absolutely stellar corn yields in a number of areas. I wouldn't be surprised, again, that as you and I have been talking for a while, Shelby, that we'll end up with something closer to 182, 183, 184 bushels, 184 bushels per acre than the USDA's current projection of 186.7. So that would have some ramifications if nothing else changed, to take us down up to just over 2 billion bushels of carryout. And that's after adjustments from the grain stocks report that happened. And with that would lead to a little bit higher corn price than what the USDA last projected September said 390. By my calculations, that's about a 425 situation. And when you look at soybeans, again, it's another conundrum in soybeans. In the last month or so of the growing season for soybeans, hot and dry in Illinois, Missouri, parts of Iowa, Indiana, Ohio, not stellar in some other places. So that hot and dryness has very, very likely scaled down yields for soybeans from what had been projected at about 53.5 bushels per acre in that last September set of numbers. I wouldn't be surprised that we end up more like 52, even 51, if things really get extreme. Say 52 bushels an acre would be a reduction of about 100 to 150 million bushels of production. And the ending stocks would be down closer to like 5.5% instead of the 6.6 that we'd had. Prices, because of being in a relatively tighter situation for beans, prices instead of probably be closer to $11. I know that sounds pretty radical compared to what the USDA had said at about $10 an acre, but we're more on the edge in terms of supply-demand balances, et cetera. And if we do see an appreciable reduction in soybean yields, and we finally get these numbers in and start shaving 100, 200 bushels, 200 million bushels off of that, well, you're tightening up stocks and looking at, again, something 50 cents per bushel higher, at least, than what the USDA had said the last time out.
Daniel, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we continue our show discussing research that has been done looking into beef on dairy with K-State Beef Stocker Unit Research Assistant and graduate student Cole Ellis. Cole, thanks for joining us today.
Hi, thanks for having me.
Cole, as we're talking about beef on dairy, what do we mean by that?
So beef on dairy is the kind of the term we use for the cattle we're seeing a lot in feedlots now that are calves that are born to Holstein cows but are bred using beef semen. Those cattle, they're raised in a different type different system than we would typically see with traditional beef cattle. So we're addressing some of the issues we're seeing with those cattle in the feedlot in our research here.
And we will refer to it as beef on dairy, but sometimes are there other terms used to describe this animal?
Yeah, common in the feedlot world is just a dairy cross, or I've heard it mentioned as dairy derived beef before. I think that's kind of a mouthful to say, so I just stick with beef on dairy.
Has this been something you've seen more producers choosing to use?
So as far as like your common everyday producer, maybe not quite as much, but the feedlot industry in this state, being as large as it is, has had to shift to feeding these type of cattle, largely due to the reduction in the cow herd that our country has seen in recent years.
You mentioned an issue, and sometimes what issue do you see with beef on dairy?
So one of the largest issues and kind of pushback we get from packers is the large amount of liver abscesses that these cattle have. There's some studies out there reporting that in a pen of, let's just say 100, you could get up to 50 to 70% of those calves could have a liver abscess, as opposed to in a typical beef animal, we only see about 20%.
Any guesses as to why that's happening?
So my guess would be, so let me start with the theory on what causes liver abscesses. So there's the common theory is called leaky gut theory. And it was actually heavily researched here at K-State by Dr. Nagaraja since about the mid-90s. Their theory is that these cattle are getting acidosis in the rumen, which is causing rumenitis. And then common bacteria that's in the rumen, such as Fusobacteria necrophorum and Salmonella, then are able to get through those lesions on the rumen wall and enter the portal vein system. And then the liver isolates those, and then the body walls it off and creates that abscess. And so I think when we start thinking about what could be a common cause of this, although we don't have definitive research, I think it really goes back to how these calves were raised. They're being raised in a traditional dairy system where they're being bottle fed and then switched to a pelleted diet, and they're just not getting the forage amount that we would typically see with a beef animal that's out on its mother in a pasture. And so we're not getting the rumen development that I think we need to have a sustainable longevity of rumen epithelial tissue going into the feedlot.
What research have you worked on for this then?
So I did a study last summer looking at backgrounding these cattle. So we got them in at 600 pounds, which I would have liked to have lighter weight calves to do a traditional background, but this was what we were able to get. And so we fed them 5 different diets with varying amounts of starch and fiber. And so starting out, we had a 50 NEG diet that we targeted 2 pounds a gain a day, 260 NEG diets targeting 2 and 3 pounds a gain a day, and then 264 NEG diets. Those would what we would consider as our feedlot diet, the best we could get here at the stocker unit with our facilities. And both of those 64 NEG diets, one had ptyalin in it and the other did not have ptyalin in it.
What did you see from those different diets then?
So we definitely saw the growth differences, especially since we targeted gain. They kind of came out how we would expect, but sticking with the liver abscess idea here, we ultrasounded these animals on arrival and then ultrasounded them at the conclusion of the study. It was a 126-day study. And we found that the higher NEG diets, the 264 diets, had about 20% liver abscesses, as to where the 3 lower NEG diets had ranging from 7 to 10% liver abscess rate.
So what does that mean for the cattle producers or the beef on dairy animals?
I think it kind of shines a little light on how we can handle these animals early, either in the feedlot phase or in the calf ranch before they enter the feedlot, and how we can background them and feeding them higher forages in a TMR and not just giving it free choice to them, but feeding it in a TMR to make sure we get it into them to help develop those rumens.
And you mentioned using an ultrasound machine. Were there any maybe hurdles you had to jump or concerns maybe you have from the results?
Yeah, so ultrasounding is the best method for detecting liver abscesses in a living animal that we have. It is only about 60 to 70% accurate. There was a study done at West Texas A&M looking at the efficacy of it. And so we have a higher likelihood of finding a true negative, which is where there's no abscess. And when we ultrasound, we see no abscess. But we also have a high likelihood of calling a false negative, where we called the animal negative, but there really was an abscess. And these limitations really just come from the animal's anatomy. As they grow and get bigger, their body wall gets thicker and hard to use the ultrasound through, as well as their intercostal spacings between the ribs becomes tighter and harder to fit that ultrasound in and scan the whole liver. The thought process is with ultrasound, we're only able to see about 40 to 60% of that liver.
What cost does liver abscesses on the livestock have for a producer or the owner of those animals?
Yeah, so there's kind of some conflicting data on how much or how bad it affects the growth and performance of that animal. And really, it could come down to the size of the liver abscess. So those can range from the size of a quarter all the way up to, I've heard, the size of a basketball. I've never seen it that big, but then really looking at the industry as a whole, the liver abscesses account for about, in this current market, I saw a number last week, about $600 million a year is costing the industry. Now, when we think about the cost on the carcass side, really that liver is only about $4. So if you just have the smaller abscesses, it may not be as big of a deal and you may not hear about it from the packers and get a lot of pushback. But as they get larger, they do start to adhere to the body wall and the diaphragm, and then that packer has to start doing a lot more trim. And the biggest issue is when they adhere to the flank steak region and they have to cut out the flank steak, and then there starts becoming a larger dollar loss there.
Is there more research you're hoping to do when it comes to liver abscesses or anything related to beef on dairy?
Yeah, I think there's a lot we could do. I think sticking with this backgrounding deal, because that's where I believe the issue is maybe starting. I'm not saying they're the whole cause, but figuring out kind of a good plan of action going forward for how K-State could recommend to our producers on how to feed these cattle, especially early on. And then these cattle are in the feedlot for a really long time. They're pretty slow growers. And so I think maybe getting these cattle larger, backgrounding them longer, getting them larger before we really start that heavy feedlot phase.
If people want to find out more information about this research, how can they do that?
Yeah, so there's not really anything out there yet, but coming up this, I believe it's in March of 2026, is K-State's annual Cattlemen's Day, and I will have a poster there as well as there is a research report in the handouts there.
Cool. I appreciate you taking the time to join us today.
Thank you. It was good to talk to you and spread the word about what's going on in the beef on dairy world.
That was K-State Beef Stocker Unit Research Assistant and Graduate Student at K-State, Cole Ellis, discussing research that he has been a part of, looking into liver abscesses on beef on dairy cattle. If you would like to hear more on this research, he did give a presentation at the K-State Beef Stocker Field Day that took place Thursday, September 25th. If you'd like to hear the recording of his presentation, you can find it by going to ksubeef.org, selecting Signature Events, then choosing the K-State Beef Stocker Field Day. And once you get on that page, if you scroll down to the Stocker Field Day presentation archives and proceedings, you will be able to find his presentation. It is, of course, under the 2025 presentations and is titled Beef on Dairy Growing Strategies. I will also link this in today's show notes on agtoday.net. As Cole did mention, you will be able to see more about this research at the K-State Cattlemen's Day, which will be taking place in March 2026. As that date does get closer, you will be able to find out more information, once again, by going to K-State Beef Extension's website, which is ksubeef.org. Which, don't forget, on November 5th, the K-State Forage Conference is taking place in Garden City. You can hear more about this conference by going online to wkrec.org, or you can go check out Agriculture Today's podcast and find the recent conversation with K-State's John Holman and Logan Simon to hear more about the conference. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, have we finally seen that transition from more summer-like weather to fall weather?
I would say so, and it was kind of a shock to the system if you weren't prepared for it. We had, obviously, when we talked last week, we were in the low to mid 80s, and we've had temperatures down into the 20s in parts of Kansas, western Kansas, especially in the valleys of western Kansas. They saw hard freezes several times in the last week. Each morning, overall, limited duration of time, just a couple hours. Definitely some much colder mornings compared to what we were. When we look at normal temperatures, we're still in that frame of it's not abnormal to get this cold. And this freeze came later than normal for most people, and it hasn't impacted everyone. When we get to central and eastern Kansas, there has been some localized freezes, but all of central and all of southeast Kansas remain without a freeze so far. So we continue to see the growing season extend in those areas. They're already going about 14 days or so longer than normal, and that growing season continues to expand with every day we don't have freezing temperatures.
Do you think we're going to see all of our temperatures below freezing across the state when we look ahead?
Yeah, so looking ahead, a big pattern change is going to occur. We've had cloud cover increase and light rain to moderate rains expanding across a lot of central eastern Kansas. And that is going to stick around. This is a trough of low pressure that kind of becomes cut off from the main jet stream and basically just sits over central Kansas for the next about 3 or 4 days. We probably won't see the sun again until early next week. This cutoff low is just stagnant. It's got a lot of moisture to work with. It's bringing moisture up from the Gulf and from the East Pacific. Although I think most of the heaviest precipitation is behind us as of this Friday. There'll be more precipitation on Saturday, and maybe a little bit more on Sunday. But that much moisture and cloud cover means temperatures are going to be stagnant. So freezes are done for the time being. The next period we look at for colder temperatures that likely might reach the 30s is we're talking maybe the end of October, next Thursday. And if not, then definitely by the first weekend in November, we have a much colder air mass that looks to push in briefly. So if we haven't seen a freeze yet, as of the time you hear this, you're not going to see a freeze likely for at least another week.
What are your predictions on the amount of precipitation we are going to have through the weekend, Chip?
Yeah, so including precipitation today and the on and off rain that'll kind of re-intensify again briefly on Saturday, and the light drizzle that's going to be around. I think by Monday morning, we'll probably have potentially as much as 2 to 3 inches of rainfall in the southeast part of the state, which is an area that really, really needs it. But then as we start to get further north and west, precipitation tapers off by the Nebraska border. You could only see about ½ inch to maybe 3/4 of an inch. And as you get further west, we kind of get to that Norton down to Meade County line is kind of where the ½ inch ends, and then just trace amounts of precipitation expected along the Colorado border. So southeast, south central Kansas will be the big winners in this precipitation event that thankfully doesn't bring heavy rain, but will provide good bouts of moderate to light rain over a long period of time. That's just going to build up more moisture storage as we go into the winter months.
Are we going to continue to have windy conditions?
Yeah, so with the transition to more precipitation and more stagnant temperatures and no real air mass clashes, that results in lighter wind overall. We had some pretty strong wind over the early part of this week. We had gusts to 45 miles an hour in northwest Kansas, resulted in some blowing dust. And unfortunately, a little bit of erosion. Honestly, it's not nearly as bad as we could see storms be this time of the year. And we have had below average wind for a lot of folks, especially in eastern Kansas. As we move forward, winds are going to be relatively light. We might get some gusts up to 15, 20 miles an hour. By the time that next front comes through the end of next week around Halloween time period, we might see an increase in winds, especially in the afternoon, just because we have a stronger temperature gradient, and that tends to play along with a stronger pressure gradient, which increases winds. But overall, no real significant wind event is in the forecast through the end of the month.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.